Today, inside Bitcoin. Hello again, it's Martin North from Digital Finance Analytics, welcome to the latest posts covering finance and property news with a distinctively Australian flavour. And today I'm joined by Caroline Bowler, who's the CEO of BTC Markets.
Hello, okay. Thank you very much for having me.
Well, Caroline, it's great to have you on the show here, and particularly at the moment because, of course, there's a halving coming up the road for Bitcoin. But I think we should probably start with BTC Markets because I'll be honest with you, until the other day, I hadn't heard of you, and yet you're quite a sizable player. So what's going on?
So BTC Markets, we are the sleeping giant of the Australian digital asset industry. We've been around since 2013, originated here in Melbourne with an all Aussie tech team, and so a homegrown success story. But we have been keeping ourselves well under wraps. Since then, we've got about, I think it's over 250,000 Australians have an account with us. So we are a sizable player, but we've always been rather lurking in the background and never really stepped into the spotlight, as it were. But that's something that we're going to be doing increasingly as 2020 rolls on and beyond.
Right. So you are basically a Bitcoin exchange, right? And other cryptocurrencies.
And other cryptocurrencies. So we trade Bitcoin extensively, and we are also the partner for Ripple for their ODL projects. So we would also see significant volumes for XRP as well as Ethereum, and probably Litecoin would be our fourth biggest.
Right. Well, we might a bit later or in another conversation, depending on how long this one goes for, touch on Ripple, because I think there's a really interesting conversation separate from Bitcoin on Ripple as well. But let's start with the big old beast, Bitcoin. Right, it's been around for a long time, and the next halving is coming up. Now, some people will know what the halving is, but let's assume that they don't, and let's just go through it step by step. And this is the third halving, isn't it?
That's correct. So they happen generally every 4 years in terms of the timing, or every 210,000 blocks that are mined. And I know it sounds such a confusing and kind of esoteric concept, isn't it? But the worker bees of the Bitcoin blockchain, if you like, are referred to as miners. And their job is to verify each of the transactions and build out the blocks. And for that, they earn a reward, part of which is made up of freshly minted Bitcoins or BTC. So back in 2009, I think it was, when the first Bitcoin was mined, that reward was 50 Bitcoins for each block. But hard-coded into the Bitcoin blockchain itself is that every 4 years there will be this halving. So the reward went from 50 to 25 to 12.5, where it is now, and it'll be 6.25 as of some point next week. And the point of that was to create a deflationary asset rather than the inflationary kind of fiat currency as we currently operate in. So I suppose it's a counterpoint to the existing monetary regimes that we have in different countries around the world.
Right. And the next one will be 4 years later. So effectively it's sort of exponentially, smaller and smaller, right? So they have to work harder and harder to get paid.
That's it, exactly. Yeah. So the point of it is they're trying to attach value to that scarcity. So a bit like gold in that sense. And so it's a store of value as an investment asset as much as anything else. But the last anticipated halving event should be, or the last piece should be mined in 2140, I think it is. We've got about another 120 years to go before we see the end of it. But to keep in mind, they think about 85% of the Bitcoin supply that is ever going to exist has already been mined. So we're just going to see those decreasing returns over time.
Right. And the last two times, in both cases, the value of Bitcoin actually went up afterwards.
That's true. That's correct. There was a significant, but not just in the intermittent days after, you saw that price chart just continue to grow. Now, that can be attributed definitely to the halvings, perhaps, but also to do with other events and development of Bitcoin and indeed the wider digital asset industry. But definitely there's a significant spikes happening in and around these times. Now, that's not to say past performance is an indicator of future, just to put that disclaimer in place. But it's still worth exploring, and I definitely think our exchange and other exchanges have seen that increase in volume, or in predicting, the activity to come.
And of course, the recent history of Bitcoin pricing has been interesting, right? But back in March, middle of March, it was around 8,000 Aussie. It's now up to 14,000 Aussie. So there's been a significant rise already. And, there's a lot of interesting discussion points there about what happened, why did it do what it did, and to how much of that is connected to the halving and how much is it connected to the broader market dynamics. It's probably hard to say, isn't it?
I don't think anyone can really distill that down. I think it's part of a whole melange, a whole creation of different factors that goes into play around these different market movements. I think, and probably in previous discussions you would have had around the topic, creating that link between what was happening in, say, the ASX and what was happening then against Bitcoin. But kind of if you look at the year to date, as I understand it, I think Bitcoin's increased over 30-something%, where the ASX Small Ords has lost by like 20% of its value. So there is still that separation between the two assets. So it's a very distinct and separate asset class with some very distinct and separate activities and factors being priced into its position.
And one of the interesting things that, as I've been observing this, is that, a few years ago, Bitcoin was something which really was, for the geeks, frankly. It didn't really have much broad appeal. But it looks to me, and perhaps you can confirm this or take me in a different direction, it looks to me as though there's a broader pool of interest now in Bitcoin as an asset class.
I think that's a fair assessment, actually, to be honest. And to be fair, also equally reflects my background is in investment banking. And back in the day when this was all coming out initially, it was met with some skepticism. I won't deny it. But equally, I think when you look at what's been built out around it, the infrastructure that's been built out around it, not just Bitcoin, but digital assets as a class. And if you look at the history of money and all the different formats it's taken, it seems like this is a natural evolution point. So whether it's into digital assets, it's a cryptocurrency or a crypto utility token or what have you, or then to the CBDCs, or central bank digital currencies, you can really see that evolution is coming through. But one of the interesting points, and I'm just got to check on my source on this, but I know that there has been an increase of about 25% year on year in the sheer number of accounts that hold Bitcoin. Now that can be anything from 0.1% of, 0.1 of a Bitcoin all the way up, but we're still seeing that traction, and that's coming through both from a retail base, but also if you're looking into this high net worth kind of family office size investment coming through, as well as the mega players. But those markets, they're generally from the US or from Asian markets more so than perhaps here at home in Australia.
Right. And we do know that even some investment banks around the world are, playing at the edges or indeed slightly playing further in these days.
Yes, absolutely. Well, if you look at JP Morgan, where their CEO, their chairperson, was so skeptical about it all, while at the same time they had a desk open. So, there's always kind of dipping your toe in. But I think it's, as I say, that natural evolution of where you're looking for value, where you're looking for an asset class that will give returns both to the market, but also then to individual investors, and particularly looking at different time frames and liquidity options and exposure to different types of technologies. The fact that this is such a global player, not impacted by one single economy or one single event, is really significant. And I think when you reframe it in the time of COVID and what's happening now, it's really interesting. It's a very interesting asset class.
Right. And so one of the critical questions is to say, what determines the price, right? Because it is essentially, it's a market discovery, price discovery mechanism, isn't it?
Well, I think that, for me as head of an exchange, I'm kind of always a bit cautious about going in too deep into these conversations because, of my role and the exposure that comes with that. But I think that with any of these new asset classes, there's always that journey of discovery, as you say, and trying to understand and unlock that element of value, particularly if you put it against, as I understand it, Bitcoin has about 65% of the whole total market capitalization sits in one asset. Now, anyone can tell you that that's an asset class, therefore, that needs some maturing, and we're still doing that. If you put it then against, say, the price of Ethereum, which is in the hundreds rather than in the thousands, but they're in a completely different pool and what it is that they're looking to do. So there's still a lot of growth and exploration to be done with this, I think.
And it's worth noting that the actual price on different exchanges won't necessarily always be precisely the same.
No, that's true. And again, that's, I suppose, a rather unique quirk. I know that our own exchange can sometimes price differently to others, both, even within Australia. And then for investors who are particularly savvy, perhaps they can look at some arbitrage options if they so choose. But again, probably be something that I would recommend to somebody who's more experienced as an investor rather than the more straightforward retail. And I think that is a really important point to make, though, that with retail investors, that there can be, with this kind of a bit of a euphoria that goes with this, rather than the cool heads, I think, that are required for any kind of investment strategy. And for me, as I say, as a head of an exchange, I think this is an asset class at its very, very early stages, but it's got so much room and potential to grow. And I think that is exactly the story as it's going to unfold. However, cool heads, rational thoughts, definitely the way to go for any investment strategy.
Absolutely. Well, I say to people, this is a speculative thing we're talking about here, right? Because nobody knows where it's going to go. There are some interesting characteristics to it because you say it's not controlled by central banks. It's not controlled by a particular country. It has some logic behind it in terms of the limited supply of the coins. And so that actually, are reasons why there is some interest. But nevertheless, nobody quite knows. Nobody can really pin the value and say for sure what the value is. It's going to go up, going to go down, it's going to be volatile. Although the degree of interest broadly from larger players these days are very different from where it was. And so you might hypothesize that ahead that there will be more stability and more volume rather than less, but nobody really knows.
Well, that's true, but I think you can kind of say that of many different asset classes as they grow out. I mean, and as I say, if you look back at its place in the history of money, it is such a natural evolution point. In terms of market swings in the next short to medium term, I wouldn't dare to venture. But in the longer time frame, I don't think this is something that's going anywhere. And I think there's an awful lot of build out still yet to go that's very exciting options and opportunities that are coming through. Also set against the backdrop of the CBDCs, where we're going to increasingly see digital finance becoming mainstream. So I think it's going to sit as part of that whole suite of options.
Well, you've introduced now, I think, a very important topic, right? Because it seems to me there's a tussle between the Bitcoin, which is non-controlled, versus the central bank digital currencies, which I think are probably becoming more significantly important as the central banks exert their muscles and do what they're doing currently. And of course, a number of them are experimenting with their own versions of digital currencies. And of course, if you go back to Jackson Hole last year, the chair of the Bank of England made the point that he considered that one of the next reserve currencies could be some sort of global central bank digital currency.
Well, I think it would be a failure of imagination not to go there too, not to take that journey with them. I wouldn't see why not. It's increasingly the direction that we're heading in. But I think right now, the only CBDC that's actually kind of out being tested in the market is the digital yuan out of China. That's only went live last month. There's still a lot to go in this. But what is interesting is you look at even conservative regimes like the Bank of England getting increasingly involved. I know they're in a conglomerate of different central banks who are coming together through the Bank of International Settlements to start building that out. And this is also, again, in the context of what the ESMA are doing out in Europe to try and build out that 29 country, or however many countries now, regulatory framework specifically for cryptocurrencies and for the build out of this. Again, and then in the House of Reps, I think there's over 30 different pieces, the House of Congress rather, there's over 30 different pieces of legislation being discussed there, majority of which are again around the regulation of cryptocurrencies. So I think the CBDCs and all of those digital assets are all sitting together in the same bucket, if you like, but it needs an international effort. It's going to involve collaboration on regulation, on the structure, on the terms and conditions. But I think that's what the decade ahead of us is going to be about. It's going to be very exciting. I think by 2030, it's going to be such a different world, such a different space. I'm so excited.
And the interesting point there is that if in fact central banks start pulling the levers that they could pull, then that would give them potentially more control of the digital money supply in particular countries and indeed cross-border. And so you actually end up with Bitcoin that is sort of, if you like, outside the system, and you've got these other digital currencies in the system. And it'll be interesting then to see which of those two evolve into the future.
Yeah, I think it's the kind of description of them being in competition with each other, perhaps maybe where the flaw is. They may not be in competition with each other at all. They may turn out to be quite complementary between them both. And who's to know, you could end up with, for an example, a Bitcoin or something similar being almost viewed like a petty cash, if you will, and the treasury function, if you like, being looked after by the CBDCs. Who's to say how this is going to evolve and develop? But That said, there's still lots of options there, I think, but one also, options for investors to explore from a technology point of view as well as a kind of a currency point.
And how do you see Facebook's offering playing into this environment then?
Personally, for me, with my background in banking and coming from that whole regulatory framework, what surprised me most when Libra first came out was possibly the lack of thought through on some of the points that they came to the table with. I think that perhaps it read like something that was developed by people who are incredibly enthusiastic about the project. And I very much got that sense of enthusiasm. But again, that kind of cool heads and rational thought perhaps didn't see all the follow through. And the reaction that they got then when they bumped up against regulators, I think, was to be expected. What I am heartened to see, though, is that they've taken that on board and gone back to the drawing board in a lot of senses and come back with something that's more developed and more thought through, which really is how humans progress. This is how it works. So very heartened, but they've got some great minds working on that. So I think we can all expect to see some great things.
And the interesting point there is, of course, and a cornerstone of it, it's that particular currency, Libra, is backed by something else, right? Mm-hmm. So it is not purely a digital, right, based on supply, demand, market forces. Mm-hmm. It's actually backed to other things. And that, for me, is an interesting contrast, as it were, between those and some others. It will be, again, fascinating to see how some of these play out. And I'm with you. I don't see these necessarily as absolutely fighting each other. There could well be a constellation of different digital solutions out there, all trying to essentially cut the costs of transactions and increase liquidity. And it's way too soon to say which is going to play out and win.
Yeah, absolutely. I think it's unfair to expect that a technology of 10 years old is going to somehow come fully formed and fully thought through. There's so much more to work through. But what is interesting, I spent 10 years in Singapore, or over 10 years in Singapore, and seeing its adoption through Asian eyes and how the pragmatic approach that they've taken to it, for me, is really inspiring. And the speed at which policies were put together and just the whole approach and framework, really encouraging, and I expect to see similar kind of coming out of Europe or going to plan and the US. But I think, as you say, that whole stablecoin aspect is really interesting. I know for the Australian regime to look at something like a stablecoin would require oversight by ASIC and so forth, which is something to be encouraged. But I would agree, it just adds another flavour, another texture to this market that perhaps is lacking currently, because as you say, it is rather black and white, rather arbitrary, rather basic, I suppose, in some senses.
And how do you react to the various reports about Bitcoin's massive rise and fall and all those things? I mean, it seems to me that a lot of the mainstream media are really not understanding what this thing's about at all.
Yeah, I think that's a fair assessment. I think that they're looking for a story to sell papers, more so than to give the rich texture that is needed to these kind of stories and the right context. That said, there is increasing sophistication in the media servicing digital assets as a sector. And that and additional kind of data points that are coming through in particular as well that add depth to those stories and depth to that research that simply weren't available 5 years ago. They simply weren't built. It wasn't possible to do so. So increasingly, I suppose it is my own media bias coming through too, in that I'm increasingly seeing stories of that nature, that more calm, rational, contextually based stories rather than. But that said, there's still a lot of unfortunate kind of stories that get placed, or examples where people have lost money through some dodgy illegal kind of carry on, which obviously, from my point of view, as somebody who's trying to lead this industry forward in Australia and beyond, very disheartening. But I understand the need for them to be reported too.
Sure. Well, yes, there have been, exchanges that disappeared and money that's just gone missing completely, or keys that have been lost. All of those things are there. But that's partly, I'd have thought, a sign of the immaturity of the industry to this point. As you say, it's only been going a relatively short period of time. So you'd hope that some of those things would get sort of locked down. And the regulation, of course, is also quite a lot stronger now than it was, isn't it? In terms of the regulations that you as an exchange have to follow, and what ASIC is also doing as well in terms of making sure that in Australia the exchanges and the investors are actually protected.
Yeah, and I think also it's to do with industry expectations. And from us, I can really speak about my own context and with BTC Markets. But I believe we were one of the first, if not the first exchange to bring in an outside head of risk and compliance who had extensive experience across all the major banks. And so was very well versed in what the expectations are in terms of a fully compliant and regulated exchange, even perhaps before some of those regulations were in place, kind of as a statute, whatever, rule across the industry. So we were already operating at that level. And again, for me personally, I have, from my experience in the banking industry, been personally regulated too. I had to sit regulatory and compliance exams as part of my job. So that's my culture. That's kind of my professional background. And I think that's very much something that's part of the BTC Markets way of doing business. We are known for being cautious, and we are known for being kind of moving at a pace. We're not rushing through things. We're always trying to be considered and rational in what we put forward, which I think probably sits as a counterpoint, but perhaps at times hasn't done the exchange favors. But that said, I think we're seeing a shift in the culture within the industry to shake out those bad players, if you like, and coalesce around a more, I suppose, a structure that best rewards our investors, that compliance structure. It's, as I say, it's only a few years that we've been around, but I would expect to see that increasingly. And I like that conservatism. I like that. I think it gives surety to investors. It gives surety to the market. And that's the only way that we're going to grow and develop is by giving them that surety and that level of comfort, and engagement with regulators, obviously, too, as part of that.
Well, Caroline, I really appreciate your time today. It's been certainly good to catch up with you and hear a little bit about your business there and the halving coming up. We'll be watching that with great interest. And maybe I can come and pick your brains again, particularly with regard to some of the other cryptocurrencies that are around, because not all of them are the same, but we're not going to have a chance to discuss that today.
Yes, absolutely. We definitely would enjoy that. I'm 100%.
Great. Thank you very much.
Talk to you again soon. Bye-bye now. Bye.